And here we are. It's time for the October update. Is now a good time to buy a house? We'll go through pros, some cons, what's happening now, and what's likely to happen in the future. And it's all about what you need to know about buying a house today. Go ahead and subscribe right here. Like the video down that way, and leave a comment about other subjects or other things you'd like us to talk about. All right, we're going to go into the slide. So we have some pros and cons right now. If you want to buy a house, the good news is your interest rates are historically low. You can get 2.25% or less on owner-occupied property. If you have good credit, good down payment, all of that nonsense. And then on investment property, I just got a quote today for a cash out refi on one of my properties at 3.6 APR. That came out to 3.1875 as an interest rate. But cash out refi costs you more, and then they go ahead and throw a bunch of other crap on top of it. So with low interest rates, you can afford more house. That means everybody's out there buying a house, which is a con of low interest rates would be low inventory. You may have trouble finding a home where you want to live at a decent price. There's places like Tampa, for instance, that have appreciated 15% year over year. So that's a desirable place. I've lived there. A lot of people want to live there, and I'll probably live there again soon. We'll see. But anyway, if you're trying to buy a house in Tampa, you better plan on paying a pretty high price for it because it's gone up quite a bit. The good news is, even though those prices might be higher with those low interest rates, your monthly payment will be super cheap, super affordable. A house that costs $250,000 10 years ago, you can, or I don't know how long ago, when interest rates were 5%, you can get that house now, a $400,000 house for just about the same payment. Yes, the only problem is they've appreciated so much that a $250,000 house, 20 years ago is now a $400,000 house, so you're probably getting the same house for the same payment. Congratulations, you avoided some inflation. We have another video on inflation and how it pays you to take a loan right now. I'll link that up here. You can check that one out on how much you make to actually borrow money right now on 30-year fixed rate. So anyway, another pro, federal stimulus. Right now, a lot of places don't have foreclosures, and you can go ahead and put your mortgage into forbearance and not pay it if you were to lose your job. So if you're worried about losing your job if you were to buy a house, the current CARES Act and probably some other things coming down the pike here. I know the current administration and Congress have stalled on negotiations for an additional stimulus package that would have provided an additional 12 months of no foreclosures. That's on hold right now, but hey, till the end of the year, you can pretty much still put any property you want into forbearance as long as it's a federally backed mortgage, which I would definitely recommend. Again, not financial advice. This is a YouTube channel. I am a YouTuber. I am not an investment advisor. I am not your realtor. I'm not your mortgage broker. Don't listen to anything I say. Okay, so anyway, as part of the federal stimulus, there's no foreclosures, which is also a con in the market. If you want to buy a foreclosure property under market value and fix it up so that you have some really good equity in it, you're not really going to be able to do that right now because nobody is getting properties foreclosed on. You might be able to find one or two out there that are just kind of hanging out, depending where you're looking, but there really is no foreclosure inventory. That'll be another thing that we discuss in the next slide for the future. So anyway, to sum this slide up, we have low interest rates, low monthly payments, and federal stimulus that's led to unforeseen consequences, low inventory, higher prices, and no foreclosures. Government's actually okay with higher prices for homes. I think the average member of Congress owns 2.5 houses. So yeah, they're probably going to go ahead and keep that housing market propped up as far as prices go. Just because half of Congress's wealth is in real estate. I don't know if that's an accurate number. Go ahead and research that. Link in the comments the actual true number to that. I'd be interested to know. And we'll definitely talk about that in the future. All right, next slide. I am tired of this one. So there's some pros and cons to buying houses. Right now, we're talking time here, not necessarily pros and cons. But right now, if you're in a bad location, you might have to move. And if you have to move because of the location you live in, then guess what? You're probably going to have to go ahead and pay higher prices. So consider this in your home purchase decision. Do you have to move right now? Are you able to stay where you're at for another 6 to 12 months and possibly get to take advantage of a impending foreclosure crisis? I'll put that video up here on the likelihood of it. I'm not saying there will be or won't be a foreclosure crisis. I'm just saying there is a likelihood, a higher than normal likelihood that we will have one. We'll go to a chart here right now. So here you are. Here's a chart of homes in forbearance. There's a chance that all of these will come out and foreclose. Not a very high chance. I would say it's like a 1 in 1 Brazilian chance because that's not going to happen. What will happen, a certain percentage of these, there are 7.2%. This line right here is total homes in forbearance. It has come down slightly. This is as of September 1st or whatever. 8/23 is what it says. August 23rd. So we're about a month and more in, and I think the total number now is down to 6.8%, possibly a little less now in October. So with that many homes in forbearance, if it was going to be a V-shaped recovery, we would see this line here. Let me switch over to where I can draw on this bad boy. Okay, there. Now I can draw. So if we were planning on a V-shaped recovery, we would have come right through here and then dropped down to back where we were for our forbearance levels. That did not happen. You can see this line continued on. It's decreasing slightly to where we're at today, or, I don't know, I drew off the page. Let's just go further over. We're going to go over to here. There you go. That's what it's going to look like. We're going to get over to December, and there's still going to be like 5% of houses in forbearance when all of this is set to run out in January 1st. Now, keep in mind, people have 12 months of forbearance, so any home put in forbearance in March of this year when all of this stuff started to go into effect, and you can see a ton of them right through here, started going into forbearance all the way through May. And about half of those, we'll check out on a chart later, are still in forbearance. They're continuing their forbearance after 3 months, which forbearance periods are 3 months. 3 months, 6 months, 12 months, blah, blah, blah. So you can renew it every 3 months. That's what would happen if you bought a house right now and lost your job due to the economy and or the global sickness going on. You'd be able to put your home in forbearance and join this group of people that aren't paying their mortgage, and you'd be able to stay in your home for 1 year without making a payment, tack those payments onto the end. That's why buying a home right now is relatively low risk if you lose your job. So yeah, anyway, here we go. Okay, here's the chart. It says 48.06% of people, we showed this in a previous video, are extending their forbearance now that it's been 3 months since they started taking forbearance. That means half of people are saying they're still economically impacted and cannot continue to make their mortgage payment. What does that mean? That means some people may just not want to make their mortgage payment. There's not really any documentation needed. You just call up your mortgage servicer and say, hey, forbear me. And they say, hey, okay, we're going to go ahead and not make you make payments for the next 3 months. Call us back if you can start making them, or call us back if you can't, and we'll extend it again. So that's how many people are doing that. So we'll go back to this other chart. So that means somewhere around 6.8% of people as of today are in forbearance, and you have half of those, 3.4%, continuing their forbearance, extending it for another 3 months. When that runs out, you could see a flood of houses hit the market. Will you? I would say maybe 20% of those. It's just an estimate. I don't have any data on that one. Maybe 20% of those people will still be in a position where they can't make the payment. You got another 20% that just don't want to make the payment and put it into forbearance. And then you got the rest of them that are kind of in between. They can't really make the payment now, but will be able to when their forbearance expires, and they won't foreclose. So let's say 20% of these people, there are 4.5 million we figured in our last video, and that would be 900,000 homes going into foreclosure, which would be roughly a 60% spike in housing inventory. That would cause a housing crash. We'll go over to our favorite chart, the Case-Shiller Housing Bubble Indicator, right here. Right now, Case-Shiller is telling us we're in a housing bubble. That's what their bubble here said back in 2006 through 2008. Bubble burst and we went down. This is really a horrible chart to look at for home prices because it's national. You can't really drill it down to a local market. Local markets are much better on movoto.com. We showed that in a previous video as well. But anyway, so it's showing that prices are at an all-time high right now. If you go to buy a house, you will be paying the all-time high nominal price. Real prices are somewhere down here adjusted for inflation. They're a lot lower considering we've had a ton of inflation that the government hasn't really told us about since 2008. But anyway, if you buy a house now, you will be paying the highest price ever according to the Fed. So what does that mean? That means, back to our slide, that means prices are increasing now because inventory is so low, there's no foreclosures yet, and next year you may see 2 years worth of foreclosures come on the market. There is a high likelihood of that, higher than normal. I'm not predicting it, I'm just saying the likelihood is high. There will be a very high likelihood as well that the federal government will intervene and add more foreclosure moratoriums and or eviction moratoriums so people cannot be kicked out of their houses. That is a cross current that you will see happening over the next 3 to 9 months. So anyway, also right now we have limited desirable areas. Everything in the super desirable areas has increased. If you want to move to a tertiary market, that would be like not Tampa, Florida. That's a secondary market and or a first tier city. I'd say Tampa's probably a secondary city. It's not quite New York size. It's still quite a bit smaller than that, but it is growing quickly, which is why prices are so high there. Anyway, if you move to a tertiary city, that would be like Ocala, Florida, a smaller town. That would be like Dayton, Ohio. That would be Tulsa, Oklahoma. These smaller towns, you can still find deals in. The problem is the houses get picked up immediately once they come on the market if they're at a reasonable price. So if you're going to buy a house right now, is it a good idea? If you are in a bad location and have to move, then yes. If you're okay with prices increasing, then yes. If you're okay moving to a tertiary city or live in one and want to move, then yeah, you should be able to find a house there. But if those don't apply to you and you don't have to move, consider the future. Again, I am not a fortune teller. I do not have a crystal ball. But there is a bubble forming according to our Case-Shiller bubble indicator. I'll pull that up again. So like we showed you the Fred chart here, the Case-Shiller U.S. Home Price Index, the red line, by the way, is the top 20 city composite index, and the blue line is the U.S. National Index. We're going to go with the blue line. But the Case-Shiller bubble, housing bubble indicator here is telling us that we are in a bubble. This is simply a visual representation for people. Do not trust this chart. It is complete garbage. It just happens to do a good job of showing you when a bubble forms and when it bursts, and then when an even larger bubble forms, like we're seeing right now on the chart. All right, back to the slides. We're done with this one. So there you go. In the future, with foreclosures, you would see a large increase in inventory coming on the market. That would mean lower prices. People would actually price their house. I'll link our incoming foreclosure crisis video up here, unless I already did, and then I can't link it again. I'll link the playlist. But what that means is when people are about to foreclose, the foreclosure process starts 6 months before they actually foreclose. It explains it all in the video, but I'll come down to it. When somebody's going to miss a payment on their house, just to summarize, they put their house up for sale at less than market value. That has a tendency to bring prices down a little bit, but those houses right now will get snapped up so quickly that nobody has a chance to even notice a decrease in prices. The problem comes in when there's so many of them hitting the market. Think about when March forbearance extensions expire in March 2021, you're going to see a chunk of houses come on the market if they were forbeared for a year. I'm just saying forbeared. I don't even know if that's a word. I'm just saying it. Forbeared for a year. So you'll see, I don't know, let's say 200,000 houses hit the market. That's like 15% of the national housing inventory according to Zillow. I'm not saying that it's going to be that many. I'm just saying there's a likelihood there's going to be an increased number of foreclosures coming on the market more than normal, which will cause downward pressure on prices. So in the future, because of this, you could see decreasing prices throughout 2021. The federal government will probably put things into effect to keep those asset bubble prices as high as they can, but they cannot stop it from falling if everybody is foreclosing. The other thing, if you can wait 6 to 9 months, you will have more choice in property. So you won't have to pick the house that just came on the market and barely meets your needs. You'll have a choice in 5 or 10 different houses because they're sitting on the market longer. You'll have longer to make the decision because there's more houses and the same number or less number of buyers in the market. As credit markets possibly tighten. We'll do another video on that. Watch out for that one. Subscribe down here so you don't miss it. Okay, great. So we didn't miss anything. Back to our first slide to sum it all up. So is now a good time to buy a house? Well, it depends. Maybe if you're in a location where you have to move, then yes, you may have to purchase a house. We have videos on negotiating real estate. We'll try to come out with some with better audio because the audio on that one was garbage. But at least if you have to move right now, you can take advantage of the lower interest rates and afford more of a house than you would have been able to 10 or 15 years ago with higher interest rates. So good, it may be okay if you have to move. But if you can wait in October 2020, my recommendation to friends and family, not to you because you're not listening to me, I'm a YouTuber, remember, is that they wait 6 to 12 months to purchase a house and they'll have a higher choice in inventory, most likely, or a higher likelihood of lower prices on houses, and possibly have foreclosures to pick up if that's what they're interested in. So consider those two cross currents in the industry. You might have to move now. If you do, then do. If you can wait, then just wait. All right, that'll do it for this video. There should be a video to watch right here after this one, and there should be a subscribe right here. Remember to like before you leave, and yeah, leave a comment. All right, y'all take her easy out there. Hopefully this was a good one.